Well, hello everyone. Welcome back to the channel. So we have a new fund from the Defiance fund family, which is it's going by ticker symbol SPYT. And this is also an S&P 500 fund, like JEPY. So let's dive in and try to see what the differences are, because I'm honestly not sure. I just became aware there was a new fund for Defiance. As you all know, Jay, who is on the channel tomorrow, by the way, if you haven't submitted your questions, definitely do in the Discord questions for Jay subthread. So he's also an advisor to Defiance as well. So they're very similar to Yield Max, but let's check these both out and we'll do a comparison and a contrast. All right, so this is SPYT, Defiance S&P 500 Income Target ETF. The primary objective of the fund is it aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. Strategy overview: SPYT is an actively managed ETF dedicated to generating current income. The strategy revolves around holding shares of ETFs that track the S&P 500's performance and engaging in the selling of daily credit call spreads on the index. So sounds really familiar. Enhanced potential yield. Our option strategy involves selling a call option while simultaneously buying another call option at a higher strike price, maximizing income potential. Oh, it almost sounds like an iron condor or something like that, if that's right. By focusing on short-term options, we aim to offer an enhanced yield compared to traditional option-based strategies. Income generation. The investment approach is meticulously designed to generate income through option premiums derived from selling index call spreads. Okay, so call spreads, the primary driver of the fund's yield. So the primary driver of the fund's yield will be call spreads. They sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income level of 20%. So I guess that would be your dividend, 20%, which is not as much as JEPY, but hopefully there's less fluctuation. By the way, in my comment on Discord, I was referring to SPYI, not SPYT. I know it's confusing with all these different ticker symbols of new funds that are being put out. It gets confusing, like JEPY versus JEPYI. Now we've got SPYT versus SPYI. Okay, each day SPYT sells credit call spreads on the S&P 500, prioritizing options with near-term expiration. This entails selling call options at or near the money strike prices and buying call options above that strike price. Should the S&P 500 value rise above the upper strike price, SPYT stands to profit from further upside appreciation in the index's value. The fund intends to pay distributions, if any. Oh, I like that, if any, on a monthly basis. Here's the NAV. It's 1992, closing price 1996. So NAV is slightly below the actual closing price. Shares outstanding 125,000, 2.49 million net assets. Literally just went public last Thursday. Expense ratio is 0.94%, so a little bit cheaper than most of the yield max funds. Let's see here. Of course, we got Mr. King. He's our first one on. Hello, G-Man. Welcome. Okay, so I'm going to try to put out 3 videos tonight. I've got a portfolio review to do of a very impressive portfolio that was submitted to me by a new member of the Discord. And then we're going to finalize our questions for Jay tonight. Oh, welcome, new investor. So do you think you would add this to your portfolio? I haven't really seen the appeal to this one over the JEPYI, other than possibly a lower dividend and better principal protection. It's so new, though, there's not a lot of information on it. So let's look back at JEPYI, because I was saying to myself, I said, well, we've already got an S&P 500 fund from Defiance, so what's the point of another one? The other one is called the Enhanced Options Income ETF. So this one is paying out a 40.27% distribution rate, and this is most likely not sustainable. If it is, I'll be shocked. But typically, when it pays out this high, we just see the NAV eroding over time. Distribution frequency monthly, 30-day SEC yield is that. This is the zero date to expiration fund. Also, not to be confused with the Roundhill funds that we just covered. To seek enhanced yield for investors, paid monthly. JEPY I can't talk today. JEPY aims to achieve consistent monthly yield distributions for investors coupled with equity market exposure to the S&P 500. JEPY is actively managed ETF that seeks enhanced income constructed of treasuries and S&P 500 index options. The strategy's objective is to generate outsized monthly distributions by selling option premium on a daily basis. The fund uses daily options to realize rapid time decay by selling in the money puts with zero date to expiration. The investment objective is to seek current income. The fund's secondary objective is to seek exposure to the performance of the S&P 500 index, subject to a limit on a potential investment gain. Okay, so the key difference is different option strategies. Now this one has almost 139 million assets under management, so this is growing fast compared to the other one, which again just went public like 4 days ago. The NAV and the closing price are almost identical, but I can tell you that NAV has dropped since this started. It's a 0.99% expense ratio, and I am in this one. I bought a little bit of it. It's a dividend play. I don't know if I'll hold it or not. It's been public since September 18th, so we're going to go over just how much the NAV has been eroding. Here is total return NAV percentage, 3 months, 1 month. Since inception, it's saying 8.7%. Here's the top holdings. SPXW, 5135 put, treasuries, and then some cash and other positions. Okay, so now let's go look at how both of them have done. You like QQQY the most from Defiance? Welcome, Sonia. We should have another voice chat this evening. So we'd like to get more of you participating in the voice chat for sure. QQQY needs to pay out less and not have share price erosion. That's what I say with all of these. Q's at an all-time high, QQQY trending lower. Yeah, let's well, since you mentioned that, that's a perfect segue. Let's go look. We'll do some comparisons here to the underlying. This will be easier since these are actual indexes. And of course, I shared the last screen I was just on. Okay, let's go look over here again. If anyone else has any questions for Jay, remember, submit them in the Discord. Okay, let's see. Where is my Seeking Alpha screen? I keep switching back and forth between StreamYard and Streamlabs. Okay, let's look at JEPY, compare it to the S&P. So I can tell you all, because I hold this one, the NAV has eroded $2.64 since inception. Let's look at 6 months here. So there we go. It's about 6 months old. If we add in the charting here, oh, perfect. See, the default is the S&P. Obviously, over the same time horizon, there's a wide disparity. You see how they were tracking with each other for the first like month or so? And everybody gets all excited when that happens, when the first dividend's announced, and everybody's like, oh, wow, they're tracking almost identically with the index. But then you see what happens after the first month. We start to get a widening disparity because even though you can see the lines, there's some similarity between the lines, the disparity or the gap is just growing wider and wider because it can't sustain the dividends that it's paying out. And you can see, you can pretty much look on the chart and see each dividend payout. There was one here at the end of October. There was one here again at the end of November. See the straight line drop. There was one at the end of December and then to the end of January, and it's not recovering. See from where it was here, and then it almost came back here. It does better probably than some of the yield max ones, but it's not recovering. That's like probably, this is like a 28% spread between these two. Okay, so now let's go look at the QQQ as our baseline versus the NASDAQ one. And then we'll pull up the newest one. The NASDAQ one is QQQY, right? Yep. Okay, so let's check this one. See, same thing. They were tracking pretty well. Actually, at one point, QQQY was beating because the NASDAQ was down. So in the month of October, this was actually beating, hold on a second. Yeah, like the first few days of September. I had them backwards, and then yeah, it overtook it pretty quick. And you see the gap is just widening between the two, and it's going to because the triple Qs is probably going to have a really good year this year, on top of the year that it had last year. So you see, we've got closer to a 40% spread here. Okay, let's take this one off now. Let's add back the S&P, or let's actually do this one here. Um, we want the SP. What's the fund actually called again? SPYT, that's right. Okay, SPYT. Oh, it's too new. It's too new to add on here. So that means we have to go to Yahoo Finance. See, this is why sometimes Yahoo Finance is better. Okay, let's see. We got another Robert on here, Robert Beckwith. Yep, yield way too high for NAV appreciation. Many of these funds can't survive if new money constantly flowing into them. Covered call sector already hugely saturated. By the way, I participated in the wheel strategy today. If you all want to check out wheel strategy in the Discord, I pasted 2 trades where I did cash secured puts on Marathon Holdings, ticker symbol MARA, and that generated a pretty nice premium. We'll see if I have to do anything this week or get assigned. I did like 10 contracts in 2 different accounts. What's the total return on JEPY and QQQY? We just looked. It's not great. It's in the red for sure. Haven't worked the numbers out on the other two. I didn't actually look at total return. We could do that. But let me first show the actual fund we're talking about here. And for that, I'm going to need to go to Yahoo because it's too new to show up on Seeking Alpha. Okay, here's Marathon Digital Holdings. So my strike price on this is 20.50, and it's already up in the after hours. So all I need this to do is expire out of the money, and I keep the whole premium by the end of the week. It's a weekly. Okay, XRP is kicking butt for those crypto fans out there. That's one of the cryptos I hold. Okay, SPYT is what we're looking at. Title Trust, Roman numeral 2, Defiance S&P 500. We got it going crazy in the after hours again. Over here, let's see, since inception, I think we're already down like a whole dollar. But this new format of Yahoo is kind of makes it hard to see exactly. Yeah, we were at 20.05. No, so we're down like 13 cents. Okay, let me go back here to Seeking Alpha and do Sonia's comparison over here. Okay. Has anyone looked at DIVP by Colin? No, that can be another one we do. SPYT seems like a good alternative. Why do you say that? Tell us why. Because I literally just learned about it, so couldn't tell you one way or the other. I'm just now looking at it, so I report, you decide, right? Um, okay, let's go back here. All right, now there is a way to adjust total return. There's a different way than the way Blake showed me. I know there is. Okay, let's go look at, let's put in JEPY again, and we'll put in QQQY, and we'll even do IWMY. Since we learned yesterday we can do up to 7 of these. And then we'll put in the underlying as well for the Russell. And then we need the underlying for the S&P. Okay, there we go. That should be all of them. Okay, so what you're going to see 2 clusters of the lines here. The lines at the bottom, unfortunately, are going to be the Defiance funds with after their dividend payouts. The lines in the top cluster are going to be all of the underlying indexes because they keep running up. Okay, so that's how they perform in comparison to the underlying. So let's take those out for now and then just look at these 3. And what I want to do is adjust for total return with the dividend. So let's see if I remember. I think it's advanced. Um, adjust. Let me see. I'm supposed to add something. Let's see, QQQY. JEPY. And it didn't add it. This is not like the most intuitive tool. Okay, it's not adding it. Anyway, yeah, the return is certainly better with dividends reinvested. Let's see, you said, I don't trust any closing price because of a wide bid ask quote price. Well, those new Roundhill investments are supposed to be taking advantage of the after hours trading and the final day of like retail trading and the zero date to expiration. SPYT seems like it's meant for the owner to spend 100% of the payouts and not have a depreciating asset over years. Okay, well that's kind of what a lot of us are looking for, right? SPYT currently holds SPY, selling calls on SPXW. Let me try to take one more crack at this here, and then we'll end the video. Let me just go back here. I know I literally just did this the other day. It takes me at least 5 times of like repetition to like do something before I remember it fully. That's not what we want. Dividend. Hmm. Anyway. Oh well. Anybody got anything else on these funds? Otherwise, I'm gonna end the video there. So thank you all for tuning in. Like, comment, and subscribe. Oh, we just got a few more people on. Anybody have any other thoughts on this fund or any of the other funds or questions? What do we have here? Don't worry so much about depreciation. Have faith. We shouldn't place that much level of importance on these. On what? The depreciation? Don't be preoccupied. Okay, if you say so. The thing is, I mean, like with Tesla, and that's another thing I need to do. I need to list out the performance of all the yield max funds because most of them are actually in the black. They're not down completely. Tesla did recover today, but what concerns most people is that the dividend payouts with this one, and then because of the underlying, we're down over the life of the fund. We're down like 60%. So that's kind of the concern there. Anyway, let's see. Oh, you all keep commenting away. Maybe a NASDAQ or dividend investor has the dividends from inception, so I could just add those into my gain loss for the answer. Um, yeah, I wish I knew how to do this. I sort of did it the other day when Blake was on, but there's a way to do it in here. Maybe it's a topic for another video, but I'm definitely going to have those ready for the Jay interview tomorrow because I want to be fair and I want to point out that at least most of them are in the black when you reinvest the dividends. Um, I do have, by the way, if you want to see for yield max, I did start to manually do these in a spreadsheet. Yeah, I would say worry about depreciation more than yield. Average Joe Investor has a new video with Sylvia of Defiance that came out an hour ago. He brought up Roundhill Weekly. Oh, he got Sylvia on. Oh, that's interesting. A lot of you have been telling me to try to get her on too. He brought up Roundhill Weekly dividends. I think that's something you can ask Jay. Interesting. So he had Sylvia on. That's something I'll have to. Well, the whole Jay thing, of course, that was followers of mine that helped us get in touch. That wasn't a tremendous amount of effort on my part, but how would I even? Is her email listed? Like, how would I even reach out? Door Gunner, welcome. All right, let me show this here. Let me go back to my Google Sheets, and I'll show what I came up with for like the total return. And I meant to keep this updated. My intent was to keep this updated for each one, but it's a lot of manual spreadsheet work. So let me show you this real quick, unrelated to these funds, but it does show the total returns, at least for a lot of the yield max funds. All right, let me share this over here. It's going to be the Google Sheets. This is the one I have for NVDY. Of course, it's not updated as of the last month. It's still November 2023, but you can see under different scenarios, reinvesting $10,000 with the dividends, you would be in the positive in all the scenarios. I think same with OARK. I started doing this here. In the scenarios, if you bought January 2023 or in the inception date, January or April, I was doing it like by quarter. So in that one, you would be ahead in all but the first one. I started doing this also for, well, SQY. I didn't get very far. That was like a short video that I did. For Tesla, I think this is all the way over here to the side, if I'm not mistaken, or it might be on the bottom here. Yeah, it is. So Tesla, I had come up with something crazy, like in this scenario over here, like actually a positive return if you had bought like in, what was it, January? And I did it all the way through the end of the year. So yeah, the dividend, reinvesting the dividend or counting the total return certainly would put most of these funds more so in the positive than we might expect. Anyway, that's all I have for you all for this one. I'll be back for at least two more. Like, comment, and subscribe, and we will see you all, if not later today, we'll definitely see you all in the J interview tomorrow. Thanks, everyone. Oh, one more comment. I think it's very weird that the fund goes lower while the underlying index is going higher. Well, that's because of the dividends. That's part of it. Um, they can't sustain the dividends unless they're paying more dividends than the premium collected by the options they sold. Well, no, if you look at it, like the premium they're paying out, a lot of times it exceeds like what the fund can do because it's capped because of the covered call strategy. All right, let's keep doing comments. My crypto is making up for my high yield ETF losses. I'm just going to start doing some YOLO options trades to make up for my high yield losses. That's kind of like an oxymoron, isn't it? High yield losses. I've doubled my crypto account in value in 2 weeks. Oh, good for you. What accounts or what cryptos are you in? Redfish, how can you be up $2 a share with IWMY when the all-time low is 1713? Maybe you guys can discuss that in the Discord. I asked the average Joe a covered call question about 2 years ago when I was new to them. He answered it very vaguely, then advised to join his Patreon group for a fee. Of course, that's what online grifters do. Not saying he's an online grifter, but I am saying that is online grifter behavior. So that's a bummer. Anyway, all right. Thank you all. Take care. Like, comment, and subscribe. See you all soon.